please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets, let's see how they have opened up. Some of them had opened up with modest gains today.
During Q4 of 2018, the gross additions to NPA were elevated at 15,737 crores.
Perhaps a move towards 10,680 on the Nifty. That would be a good buying opportunity.
If a decision is made and the sanctions are imposed, then I do think we've got a concern that oil will continue to trade higher.
ICICI first trade is 4% higher, 4.4% higher.
We will still continue to hold on to our view that we can get a very low double-digit earnings growth in FY18.
Number of options that we are looking with the government, and while some of them we will do internally and optimize our cost.
Walmart and Flipkart are all set to sign a definitive agreement giving the US retail giant majority control of India's homegrown e-commerce unicorn.
For Jubilant Food, the same-store sales figure is out and it's a 6-year high, 26.5%.
Okay, another day of result reaction, but in general, the big story today has been ICICI Bank, the way that's carried the Bank Nifty for better part of the day. But there's been no follow-through from other stocks. That's also been the other story, of course, of the day. This is Closing Bell. I'm Anuj, with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. You stole the question from me, really, because that's what I was going to ask you about. But first, on this very interesting banking trade that's playing out, I mean, to me, it looks like suddenly, there is a let's play the left behind corporate sector banks trade. So SBI, ICICI Bank, these are all moving higher. And your usual suspects, the Indusins of the world, the HDFC twins, they're also falling behind. So your thoughts on that? And the fact that the market hasn't been able to build on what was such a great start yesterday.
Oh yes, so I think for starter, today is not as good a day as yesterday. Yesterday was across the board buying. Today it's just one stock carrying. But today's move in ICICI Bank just tells you one thing: why sometimes we give so much importance to history in stock market. Because at the end of the day, the greed and fear emotions are the same, right? I mean, it's the same set of people who are in the market. 1 year back, the same thing had happened with ICICI Bank, and just about 2 weeks back, we had, same thing with Axis. And till yesterday, everyone was asking, is it such an easy trade? Can ICICI Bank do an encore? And it's done better than that, actually, right? I mean, it happens in stock markets, and that's why, of course, okay, by the way, before we move forward, just take a look at the stock of PC Jewelers once again, and it is the top rated stock now, down about 20%. But more importantly, from the high point, it's now down 37%. And that was always going to be the problem with the stock today, now that it was out of F&O ban. So those who missed shorting it for last few days, now coming back with a vengeance, and 20% gone now on that stock. How should you position yourself in this last hour? Ashwani Gujral and Prakash Gaba with us. Good afternoon. Ashwani, been a very interesting day. The mid-cap index as we speak is down 1/3 of 1%. 200 point higher on the Bank Nifty, most of it courtesy ICICI Bank, and Nifty flat right now. Your thoughts for last hour of trade and your stock calls?
And ICICI Bank has gone up because of better than expected results. So I think last hour, we've taken short positions on the Bank Nifty in the hope that people who are long ICICI Bank would take profits because they can see the other banks are doing fairly poorly, the IndusInd, Yes Bank, Kotak, etc. These couple of corporate lenders can only take the market up so much, or take the Bank Nifty up so much. Even they couldn't take the market higher. So that way, I think it's a good time to get short on the Bank Nifty. I think beyond this 7%, and it started from 250, the stock will need to consolidate. Better news will need to come because nothing has changed. Loss was expected, loss came. No resignation, no resignation. So, I mean, we are just kind of getting overexcited. So, having said that, for the last hour, I want to get short on a few banks. Like Kotak is a sell with a stop of 1250, target of 1200. United Spirits is a sell with a stop of 3400, 3410, target of 3300. And DLF is a buy with a stop of 215. Target of 232.
Okay, Ashwani, it's an interesting call going against the market when it comes to the banks. Let's see how that plays out. A couple of trading ideas there. We also have Prakash Gaba with us. Good afternoon to you, Prakash. What is your reading? As we're speaking, the Sensex has also just dipped in negative territory. Mid-cap's down about 0.5% right now. Your trades?
Simple, selling pressure in the upper region. Sluggish up move and aggressive down moves. That's what I don't like about it. Aggressive down moves goes up very sluggish. So it basically means it's going up to come down. I mean, I would say that Nifty looks like there's a selling pressure 10,740. We can see a slide around 10,660. I won't be surprised. And the best thing is the banks got tired on the way up. Good chance it can slide down to 25,950 zones. Weakness. I like two stocks here. One, I too will go with DLF, certainly looking good to me, and can see a move up to 230, stop below 215. And I also like Maruti. Maruti is building it up. Looks like it's forming a base out here. We could see an up move to around 8,850 zones. May take a day or two for that and stop below 8,720.
Okay, let's now do one thing. Let's cut across to the management of Godrej Consumer detailing those numbers.
This profit growth was delivered while investing in our brands. Marketing investments increased by 16% for the year. We believe these investments are strengthening our brands and are also setting us up well to accelerate growth in the quarters ahead. Across the various categories, soaps, air fresheners, and liquid detergents performed well. Our household insecticides business experienced some challenges due to a less favorable season. However, we have launched several breakthrough products recently that will enable growth to get back on track. In terms of channels, urban pickup was reasonably good, though rural demand was much better. Given the focus of the government on rural development, we believe that rural growth will be a key theme this year. Post GST, we have significantly re-architected our distribution system. We believe that these changes will enable us to capitalize on improved consumer demand. The performance in our international business was relatively softer due to weakness in Indonesia and Africa. However, we expect to see strong turnaround in growth rates in this year. Many of the geographies that we operate in are projected to have better economic growth, so that should fuel stronger consumer demand. In the last quarter, our Indonesia business sustained its robust margin expansion. We regained market share in household insecticides with exit.
That was Godrej Consumer. We'll talk to Mr. Gambhir, of course, on the details and the internals of the numbers. But before that, Sudeep Bandyopadhyay is also with us. Sudeep, good afternoon. Your thoughts on these two numbers, Godrej Consumer, where the market's giving them a bit of a benefit of doubt, and Jubilant Foodwork, which after a big intraday rally is now seeing cool off.
Good afternoon, Anuj. I think Godrej numbers were by and large on the expected lines. So there was nothing extraordinary. The volume growth around 6% is by and large okay. But having said that, I think the expectation from the market was little higher. The management commentary where they have reiterated that the next fiscal, that is the current fiscal, is going to be much better, is quite reassuring. Overall, if you see there, the markets, international markets haven't done well. Out of the 3 domestic businesses, 2 of them, which is the the hair color as well as household insecticides business, haven't really shown great growth. Soaps have grown about 18-19%. So I think out of the 3 segments, 2 haven't really performed well. So a little bit of a setback there, but the management commentary has taken them forward. Overall, I think this correction, or of course the correction hasn't happened, market has given them benefit of doubt, but if there is a little bit of correction somewhere, I will be a buyer in Godrej Consumer. I think the fundamentals are right, the business is right, they are doing the right things by getting into few international markets. So yeah, I am a buyer for long term in Godrej Consumer. Jubilant is a slightly different story. I think fantastic results they have come up with. The market had already anticipated and had run up quite a bit. So I don't think I will buy at current levels. Performance is good, but the valuation is looking a little bit full.
Okay, so Deep, since we're talking earnings, let me throw in the third key number of the pack as well for today, and that's Kajaria. numbers were disappointing. I mean, they missed our poll quite a bit, but the management sounded very optimistic. And plus, they said that volume growth is in double digits. I think that was ahead of estimates. It's a stock that's really underperformed. How would you play Kajaria now?
Well, I think a little unfortunate, this stock. I mean, there were a lot of expectations around companies associated with construction and building materials. Kajaria is one of the leaders in that space. GST also was supposed to benefit these organized players in a big way, because a very large segment of the this market where Kajaria plays is unorganized, and they were supposed to suffer, and organized players like Kajaria were supposed to benefit. I think that hasn't yet got played out, and the numbers doesn't definitely reflect any major benefit on account of that. But having said that, I think we are bullish on this entire space in the medium to long term. So Kajaria, taking the opportunity of some correction, I will recommend a buy. I think somebody has 1 year plus time horizon. It's definitely a buy, with all kind of housing projects getting launched, housing for all, and smart cities and things like that, household renovations all taking place. Kajaria definitely will do well over the next, let's say, 12 to 18 months.
Fair point. Ashwani, I was hearing you on Jubilant, some time back. But for a stock like this, what would be a good level to re-enter? Today, of course, it's seen a lot of profit taking. You expect that to continue for some time?
I would think so, because if you don't book profits on good news, when will you take profits? So my sense is that it can easily give back 100, 150 points, and that will be a good entry point. Now, whether that happens or the stock continues to move up, that time will tell. But I don't think if a stock is not moving up on good results, that is a sign that its chances are fully priced. And having said that, ICICI Bank is now coming off, so my sense is that a lot of long positions may be getting out on this one as well.
Okay. I think we have the Godrej management, Mr. Gambhir, with us. If we can touch base with him, let's just go over the numbers. Mr. Gambhir, can you hear me? Okay, while we're connecting that line, I'll just...
Guys.
Okay, all right. Mr. Gambhir, thank you so much for joining us on Closing Bell on CNBC TV18. I want to first start off with the Indonesia business, because that is still a bit of a concern with your shareholders and analysts as well, because trends have kind of reversed. I mean, that improvement that we were hoping, that hasn't continued in the fourth quarter. What's the outlook you can share?
Yeah, I think on the Indonesia business, the macro environment does remain challenging. However, we are very hopeful that the worst is over and that we'll see a much better year this year. What ended up happening was that the growth was impacted by some of the modern retail partners actually reducing inventory during the quarter. The sellout rates have been trending in a positive direction. And also what's encouraging is that earlier on we had lost some share in insecticides. We regained all that share back, and our market share is over 50% now. Thanks to some of the innovations that we had launched. We've also initiated a very aggressive go-to-market transformation. And the great thing is that we've sustained our robust margin expansion. And so in spite of some slowdown in sales, our EBITDA margin increased by 370 basis points. This is in spite of actually increasing our A&P spends by 160 basis points. And so clearly, while the performance was not what we were expecting, we are very hopeful that you will start seeing better performance from that business starting this quarter itself.
Okay. Mr. Gambhir, good afternoon. So when you said that you expect to see a strong turnaround in growth rates in 2019, do you have any numbers in mind?
What we are hoping to achieve is at least a double-digit volume growth. And I think if we achieve that, that will be a good step in the right direction. It's a little bit uncertain right now what ends up happening as far as price-led growth is concerned. But in India, clearly, we are hoping for double-digit volume growth. We are hoping for Indonesia to get back to double-digit growth as well. We are hoping for Africa to get to growth in the high teens. So across the board, I think we've used the turbulence of the last year to really step up the momentum on the pipeline for new products. And so this year should be the most active as far as new product launches are concerned.
Okay, so this double-digit growth, will this come at cost of margins or pricing or say increased ad expense?
I think from our point of view, if we look at our marketing spend, even last year, our marketing spends continue to increase at a healthy rate. Our marketing spends have been competitive, but at the same time, we've delivered healthy margins. And so we feel very comfortable that we can sustain margins or try and grow margins ahead of sales growth. It may not happen in every single quarter, but there is enough room in the P&L to have a competitive level of advertising spend and yet deliver strong profit growth.
Okay, so just a couple of follow-up questions on all that you've shared with us. First, let's talk volume. So you're saying India volumes in FY19, you're hoping to do double digits. Now, you know, if I could push you to give us a closer range, I mean, are we talking, let's say, 10, 12%? Are we talking mid-teens or high teens? I mean, in Africa, you're looking to go high teens.
So for India, volume growth last year was about 8%. I think we will try and aspire towards getting volume growth in the range of 10 to 12%.
Okay, 10 to 12% volumes for India this year. Sir, on margins, you're saying that you could, in fact, look at perhaps even improving the margin profile for this year. So is there a target band that you have in mind? And would that continue irrespective of input cost inflation?
I think, you know, at this stage, we wouldn't want to give a specific guidance on the range of margin. Our efforts will be is to, first of all, drive sales growth. That's the single most important priority. And given the kind of, you know, agenda we have with our new products and the investment we are making in improving our distribution, we do believe that the focus on top-line growth should be the #1 priority. Having said that, I think we will try and ensure that our profits grow in line or ahead of sales growth. In terms of commodity price increases, I think for the next 3 to 4 months, we have reasonable covers in place, and so margins should not be an issue for the first half of the year. For the second half of the year, if costs go up, that might present opportunities to take some price increases. That's not the plan right now. The biggest focus will be on driving volume growth, but for the year, we feel very comfortable that we can show much better top-line growth along with improved profit growth as well.
Okay. About new launches, Mr. Gambhir, any specific areas where you are targeting these new launches for the year?
It is going to be across the board in household insecticides, in personal wash, in hair color. Over the last month, we've already had 2 launches in insecticides. We've launched a very innovative Goodnight Power Chip that is intended to upgrade coil users with 2/3 the price of coils, which is a much more affordable, much more efficacious product, easy to use. And with the kind of investments that the government's making in rural electrification, we believe this is going to be a breakthrough product. We've also launched a liquid machine with 50% more efficacy. And then beyond these, I think every quarter, we will have at least 2 more launches that are going to be planned for the remainder of this year. That's in India. A similar agenda is also in place in the other geographies in our operations.
Fair, sir. So, I mean, given what you've just said, on both of these segments, because this is where there's been a bit of a disappointment in Q4, household insecticides and also hair color, what is a normalized run rate that we can expect in the coming quarters?
I think in hair color, it's important to look at the numbers over a couple of quarters, because in Q3, once the GST rates came down, we saw a 33% increase in hair color sales, largely driven by upstocking in the channel. So if you take a look at hair colors over a 2-quarter period, the growth was about 18%, which I think is a very healthy growth rate. Insecticides clearly has been a disappointment. Some of it's been driven by seasonal challenges, but clearly, as market leaders, our job is to grow the category. And given the launches that we have now at this time versus some of the other products we had launched last year, like personal repellents, I do believe that we have all the right products that we can now get our insecticides business back to to at least low teens, if not mid-teens growth this year.
All right, Mr. Gambhir, we'll leave it there. Thanks a lot for joining us today and outlining the strategy. Well, you know, Surabhi, if it wasn't Godrej Consumer, it would not have been up 2%. You know, it's because if you look at those numbers, the market is buying what you know
what the management is telling you,
and you know, and there's a reason for that, because that's what you do with Godrej Group, and that I think in part explains that despite you know what looked like a bit of a pedestrian number, after that you saw that because you know the management was guiding for something good. So
but Anuj, I want to get back on Jubilant Foodworks and get your sense on what might be happening now. Fantastic number, not a single number where you can complain on any count. And yet stock is at the day's low. I mean, why would people choose to profit book on a day like today? I mean, I'm not quite understanding what's happening with Jubilant now.
You know, if you see the one-year chart of Jubilant Foodwork and actually 6-month chart of Jubilant Foodwork, 3 months back when they came out with these kind of numbers, and you know, those were of course stunning numbers. You look at that chart, there was a vertical rally that you saw, and next day onwards for 3 days there was a decline, and after that the stock started you know it didn't stop. So you know, again it comes back to the same point, things do repeat in stock markets. You've had a big rally, and I think from those levels of 1800 to 2600, it's a spectacular rally, and we had discussed this in the morning as well, that while you know 18%, 20%, the street for longest was talking about a number in the you know high 20s, 24, 25% number was talking. Now it's 26 instead of what you know the street was working 24.5. That's okay. I think 2 or 3 days of consolidation, and you will see once again, you know, the stock perhaps at some point again making new highs. But the risk of, you know, this quarter's earnings being peak earnings is there, and that's why, you know, you're seeing this correction. But nothing wrong in that. You know, buy on rumors, sell on news, classical example.
Absolutely, and some bit of vertigo can't be, you know, can't entirely be ruled out at such heights, I guess. So flat trends, absolutely flat on the index, as Anuj put it. If it weren't for ICICI Bank, things would have been so different. Let's get some more trading calls going then. We've got Sandeep Pagle joining in. Sandeep, what's on your list?
Afternoon, Surabhi, I would go with a buy in a DLF stop loss of 217, target 232, and a buy in a BEML stop loss 1080, target 1170.
Okay, so thanks a lot.
That's 3 buy calls on DLF. All our technical experts are, I think, completely in step with DLF.
Yeah, I mean, it's done well, and of course, good sector of late has done well. So that one, of course, making highs. But the other space which has made a comeback today, and Sudeep, I wanted your thoughts on this, is the oil marketing company space. I mean, HPCL, as we speak, up 3%. You reckon these stocks have now priced in the worst and are ready to move on? We saw what happened post the Gujarat election. Something similar could happen here, you think? Sudeep? Okay, I think we have lost that. Ashwani, I wanted the same question you know, addressed by you as well. Your thoughts on oil marketing companies. Is this a rally to sell into, or do you think perhaps the street has now priced in the worst?
How does the street know the worst? Could be $100 on crude. See, these are all you know, trading rallies. If something drops 30%, it can come back 5%. That always happens. But something very interesting is happening now. A, NIT Tech is moving towards the highs of the day, and B, Kotak is seeing buying come back, while ICICI Bank is seeing profit booking. So maybe at lower levels, the retail banks are finding some amount of buying. So that's something people can watch out for.
By the way, there's a lot of movement on a couple of financial stocks. Pull up South Indian Bank. There's a big spike there, 2.5% on the upside. Group Finance knows no stopping. 6% up move today. That's South Indian Bank, which is now getting really active. Group Finance, blue sky territories. If you see a 1 year, it's a stock that hasn't stopped. NIT Tech is almost 3% higher. So lots of mid caps on the move. By the way, the mid cap index has cut its losses to half. When we started the show, the index was down almost 0.5%. Now it's down just 0.25%. And Anuj, I'm seeing lots of stocks fly around now. NIT, South Indian Bank, Arvind, Hexaware, Equitas. So suddenly traders stirring to life?
Yeah, it looks like that, and a lot of stocks surging. Yeah, I mean, I think NIT Tech is the nice spot. Both you and Ashwani talking about that. Hexaware, I think, of course, making a big move. So looking quite good as far as that is concerned. So, Ashwani, on NIIT Tech itself, 1070 as we speak, what would be the levels that you'll watch out for?
See, it appears that definitely mid-cap tech has bottomed out. Now, large caps probably will take some time, but NIIT Tech came off 4 days, held 20 DMA. I think the rally may have just restarted here. So, at least 1150, 1160, which was the previous high, should come in.
Okay, all right, gentlemen, let's get some more fundamental opinion going on that note. Earlier in the day, we caught up with Indrajit Bhatia, head of research at Macquarie Research, to understand what he thinks of the earnings season so far and whether he's expecting things to improve from here on.
The earnings have been reasonably okay, nothing great to kind of talk about, but no meaningful downsides also emerging. So it's kind of more of a sideways earnings that we have kind of got till now. Obviously, there are expectations which are much more elevated for FY19 and then going into FY20. So I think we'll still continue to hold on to our view that we can get a very low double-digit earnings growth in FY18 and then followed up with something more like 16-17% growth into FY19.
Your thoughts on the market, because we had a big correction in Feb and March, but April we had a big rally, and is almost continuing, and we are within 400 points of new highs. You reckon this market could go towards new highs?
Look, our year-end target is 11,500, so it would expecting it to kind of get into that new high zone. But again, the upside from these levels seems to be fairly limited. We think the market has been waiting for earnings to come for eternity now. So even when the earnings start to come through, we would need a stronger dose of kind of a boost to take the market to a much higher levels. There are a lot of important risks which are there on the horizon, which cannot be taken out of the equation.
What's the message from ICICI?
ICICI, it clearly, it's given the largest corporate bank in India. It is telling you that though there could be more pain in terms of provisions for another couple of quarters, but we seem to have kind of put a perimeter on what is the extent of problem, which to me is like the positive takeaway. So it might take another 2 or 3 quarters for all the recognitions kind of that to happen. But after that, the corporate books for the Indian banks would start to look much better. Another key issue that we have is that clearly a large. Now this means that the companies which are going to be lower credit rated, they're going to find it difficult to raise money from the banking system. And I think this is going to play an important role to the extent of recovery in the investment cycle or the private capex cycle which can happen in this country. And that's why our view has been that private capex cycle might take slightly longer than expectations which are there in the market. It could be very well be a second half FY20 story from now on rather than a late FY19 story.
What about your view on a stock like HCL Tech? I was just going through your note. It is one of your top picks in the IT space. Were you not disappointed with the guidance this time around and the the issues that the company spoke about?
I think those issues are there, well understood, but we still think that it's one of the fastest growth. So I think that gap with the frontliners will start to, and given way the flyers are trading at, the valuations are now fairly rich there. Do not leave too much room for upside, and which is where a catch-up trade in HCL Tech can happen.
Indrajit, so for this year, what are the big triggers? Of course, you're talking about earnings. Politics, could that be a bit of a spoil sport this year? We have Karnataka elections now, then of course the big state elections. Your thoughts on whether that could derail the rally?
So I think if you list down the risks which are there, the politics, both domestic and global, is definitely an important factor. What we believe is elections which are later in the year in the northern belt, they are probably more important. Obviously, there would be market reactions to what results come out of here, but we don't expect that to kind of substantially change the course of the market.
What are you betting on if you're not expecting the sectoral play?
Two keys. Side, we expect infrastructure spending to see more impact on the ground. So we have been having announcements till now, but we believe FY19 could be the year when the execution really clearly picks up on the ground. Real issues, we are cement, even to an extent banks will kind of continue to benefit. We continue to expect the domestic consumption story, so we would be slightly cautious on the valuations there. So an area where we expect but now picking up. So the area.
A quick break. We'll come back and, as we promised, Tahir Badshah of Invest.